Good morning and welcome to Market Opening on our collab show between Business Today and India Today TV just after 9, and we're here to get you all the market opening action. Let's take a look at the headlines. The US Federal Reserve cuts interest rates for the third consecutive time, but the vote is highly split with 3 dissenting members. One more rate cut flagged for next year as the Fed warns that inflation still remains high and the job market is cooling. Trump says the cut is too small. Dow Jones up more than 1%, Asian markets also in the green. Indigo chairman Vikram Singh Mehta apologizes for last week's mass cancellations, vehemently denies allegations that the airline engineered the disruptions to bypass new FDTL fatigue rules. The DGCA, meanwhile, has tightened the noose on Indigo. An oversight team will be keeping a tab on its operations. It's one of the biggest deals by an Indian IT company, TCS, to buy AI services company Coastal Cloud in an all-cash deal of $700 million. Coastal Cloud is a Salesforce Summit partner and offers artificial intelligence-led advisory and business consulting services. Analysts say the acquisition will help TCS in the mid-market customer segment. Donald Trump launches the Trump Gold Card visa, US now taking online applications for the new path to citizenship. The new visa allows foreign nationals to get permanent resident status by paying $1 million to the US Treasury. The visa is also open to corporate sponsors for hiring 1 or 2 more employees with a $2 million payment per employee. All right, and markets are eyeing a green start after a 3-day losing streak, with the gift Nifty up about 90 points, tracking US gains post the Fed rate cut, though FI selling is also persisting at this point of time. 1,651 crore rupee in outflow that we're seeing. Overnight, of course, on the back of the cut, Dow up over 1%. The Fed delivering a 25 basis point rate cut exactly as expected, bringing the Fed fund rate down to 3.5 to 3.75%. But the move did come with a note of caution. The FOMC saw 3 dissenting no votes, the most since 2019, and policymakers signaled only 1 quarter-point cut in 2026. Chair Jerome Powell said the committee will now move carefully, staying attentive to both inflation and jobs data. He also added that while AI might be contributing slightly to softness in jobs, it's really tariffs that are driving the inflation overshoot. The Fed also announced that it will begin buying $40 billion in Treasury bills starting Friday. Despite the cautious tone, Powell effectively ruled out the possibility of any rate hikes ahead, saying a rate hike is nobody's base case right now. He stressed that the Fed is now well placed to watch how the economy evolves and respond based on incoming data. Soon after the US Fed rate cut, President Donald Trump launched a scathing attack on the central bank and its leadership. Trump called the cut a very small number, saying it should have been doubled. Here's what Fed Chair Jerome Powell said, and right after that, President Donald Trump's sharp criticism of Powell's move.
A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 1/4 percentage point.
We should be able to do a lot better than 3 and 4. We're scheduled to be at 4%, which is pretty amazing because we have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve is a stiff, and you fight that. It's amazing. We fight that, and yet interest rates are going down, except with him, not too much. He did a rather, I would say, a rather small number that could have been doubled, at least doubled.
All right, we're now joined by our colleague Shailendra Bhatnagar, Chief Analyst and Editor Markets. Rajesh Palvi also with us today, Head Technical and Derivative Research, Axis Securities. Let's take a look at how the markets stand. Just 2-3 minutes to go for opening this morning. How's the setup looking, Shell?
Good morning, Abha, and a very warm welcome to all viewers who are with us on India Today Television. Well, Abha, I wish we could just lock away the Nifty and the Bank Nifty for 5-7 days and then look at them after a fortnight or so. All the pain would have been absorbed, but it's not looking good for indices at least, and the broader markets also seem to be in a bit of pain, but lots of individual stocks that might do well. Especially the chemical sector is looking stronger than most. So the usual suspects from there, SRF and Navin Fluorine. Plus you see a lot of interesting trades coming in the infra space. Therefore, Siemens as also Cummins India. And of course, from the NBFC space, Chola Finance and AB Capital, L&T Finance. So bit gains, but broader markets refuse to sort of latch on to the gap up that happens, and then there is heavy selling pressure coming in. So December is going to be painful, Abha.
All right. Rajesh, good morning. Let me get a view from you as well on the markets despite the Fed rate cut. And I think this is what's really worrying everyone. We haven't seen any kind of fillip. Any of the news triggers have not really led to a major bump up when it comes to buying sentiment.
Good morning, Abba. Good morning, everyone. So, looking at the near-term, short-term setup has turned, slightly weaker in compared to, which we have seen in the month of October. Nifty is now trading below to 20-day moving average. Nifty has broken the important support area of 25,800 put-based concentration. Looking at the data on other sectors also, some of the stocks where we were seeing, that strength was there again, witnessing profit taking at higher level. So leadership is absent at this juncture to support the indices at this juncture, and banking stocks which were holding the ground is also attracting the profit taking. So we believe that market is still cautious despite this Fed outcome. I think there is no as such thumbs up by Indian market at this juncture. I think 25,700 is the immediate level to watch for intraday perspective. Though put-based concentration is clearly showing, PCR ratio is clearly showing that we are in oversold trajectory, but we have to see how 25,700 able to defend or not. If it's breaks below 25,700, then we may see further more liquidation. On the higher side, 25,900, 26,000 are major supply zones, so that is a very important and challenging level for near-term trend. Even on the bank Nifty now trading below to 59,000 marks. So I think that's the immediate level to watch for. If we again able to regain, then some recovery would be there. But select pocket where one can focus on the trading side that are showing a sign of strength. So very
Right.
sector and stocks are available to on the buying side.
Okay, all right, let's take a look. We're just counting down to opens. I just want to bring up some of the stocks in news this morning. Indigo, of course, is going to be top of our radar. And remember, lots of news coming in with Indigo actually cutting now its Q3 capacity guidance. A high single-digit year-on-year growth in Q3 capacity, and government order to cut flights to impact both Q3 and Q4 for Indigo. Loss of revenue due to flight cancellations. Overall financial impact is yet to be audited, but clearly there is going to be an impact on Indigo, and we're finally starting to see that. Until now, most brokerages have pretty much maintained that Indigo will manage to continue to rebound from this entire week and the kind of a mess that they've seen. But now we're starting to, of course, get some reports coming in that we might see an impact in the next couple of quarters, and especially after we've seen the government also take action here. It's been a week of unprecedented chaos in the skies. Indigo has denied any attempt to game pilot fatigue rules. Tens of thousands of passengers were left stranded and regulators fuming after Indigo failed to comply to new aircrew fatigue rules. Chairman of the board, Vikram Singh Mehta, has apologized to flyers but has rejected allegations of engineering the flight cancellations.
However, there are some allegations that are untrue. That Indigo engineered the crisis, that we tried to influence government rules, that we compromised safety, that the board was not involved. These claims are incorrect. Indigo has followed the pilot fatigue rules as they came into effect. We operated under the new rules throughout, both in July and in November. We did not attempt to bypass them, nor did we do anything that negatively impacted our unblemished track record of safety. The disruptions of last week did not happen because of any deliberate action. They happened because a combination of internal and unanticipated external events, including minor technical glitches, schedule changes linked to the start of the winter, adverse weather conditions, increased congestion in the aviation system, and implementation of and operation under the updated crew rostering rules.
All right, that's Indigo continuing to be in focus. The stock, let's just pull that up for you as well on opening and see how it's continuing to perform on the back of all of this news. And of course, we've also had a revised winter schedule submitted to the regulator. The stock continues to be down about 1% or so, and we'll bring up the weekly performance as well, just to give you a sense of what's been happening on Indigo, with the chairman of the board finally speaking out and apologizing as well, down about 12.5% this week. That's the big news maker this morning. Shell, opening ticks. What else are you picking up? I can't remember the last time post a Fed rate cut, markets were this quiet.
Well, Abha, that's the nature of the beast now. No matter what the good news is, the markets will refuse to accept it. And as I have been telling a lot of sensible people, that if you are just a normal investor with money in mutual funds and a SIP in place, you need a holiday and you need to sort of enjoy the next 15 days, enjoy the Christmas chill, and just have a holiday. Nothing is happening. From the beginning, the advanced decline ratio is negative. 1,000 shares in the green versus 1,500 in the red. The only gainer worth its salt is the IT and the metals index. Nifty PSU Bank was oversold, so there is buying happening there. And how can we miss Hindustan Zinc? This is something that we've talked about earlier. So those gains are there in the market. You have DCM Shriram 3.5% higher, Hindustan Zinc 1% higher, a bit of buying happening on Bombay Stock Exchange, but the real game will come after 1 hour of trade. Let's see how it goes, but it's just slipping and slipping. The lone gainer being Eicher Motors, a record high 7,300 on the NSE 500. So that's the sad story of markets today.
It is pretty much red all around, I have to admit. Rajesh, let me come to you. You were also, of course, tracking some of those expiry levels. Some amount of respite on IT, of course, a big deal in TCS as well. So I'm just going to pull up TCS in particular, but I'm seeing limited gains across some of the IT names. Where would you perhaps hedge your bets at a time like this when markets are looking extremely weak? Okay, I think we've lost Rajesh's audio there. Okay, let's pull up TCS once again on the screens. Remember, there have been a spate of pretty large deals when it comes to AI and cloud, and the latest one there also leading to about a 0.5% uptick on the giant. So that's TCS for you today. All right. Rajesh, I think we have you back with us. Just wanted to get your view on some of the IT majors, and possibly, would you suggest IT as one of the strategies in a weak market?
Yeah, I think IT could be a contra bet at this juncture, as rupee has already weakened, and the benefit of dollar strengthening is going to play some positivity in IT sector, as already we have seen a major correction in the last couple of months for IT stocks, but some recovery is taking place in large cap IT as well as in the mid cap IT space. So from large cap IT space, I think TCS is a bet where one can focus on, as stock managed to give breakout on the near term, short term structure. So if it continues to trade above 3140, 3150 level, some buying interest would be there. And on the higher side, once stock crosses to 3250, I think short covering action can trigger further here, and possible rally to 3350 we could see. But from that space, I think LTI Mindtree is looking promising the way stock has moved up in last couple of weeks. I think here this stock has potential to extend its gain, and possible rally towards 6400, 6500 we could see for LTI Mindtree. So one can focus on LTI Mindtree also, along with TCS on the downside. 6120 needs to keep as a stop loss.
All right, that's on some of those IT majors then. And let's talk about metals, because Hindustan Zinc is up about 1%, and what's keeping it up is, of course, some of those metal prices which continue to go from strength to strength. So let me get a take from you on that as well, Rajesh.
So Hindustan Zinc has bottomed out on the long-term chart also. After a long consolidation,
Okay.
we have witnessed, breakout in Hindustan Zinc, and the way stock is now trading above 510 level. I think if it's sustained above these level, next target would be around 535 to 540. Stock is, now penetrating its contracting triangle formation breakout on the monthly chart. So one can hold the position, and metal as a pick, I think with Vedanta, Hindustan Zinc, National Aluminum, all these stocks one can keep on their focus. And we believe that, some more upside momentum we could see in the near term for these stocks.
Okay. Ola Electric, let's pull that one up for you, down about 5%. We've got a downgrade coming in. S&P has downgraded promoter ANI Tech to CCC minus from CCC plus. This doesn't come as a huge surprise, Shell, on Ola Electric, given the spate of bad news and underperformance that the counter has been dealing with. Markets have been waiting for a long time for some kind of strategic commentary or reassurance, but clearly that's not been forthcoming, and that stock is now seeing a bit of a nosedive coming in on the back of a downgrade.
Well, it's not exactly a nosedive, Abha. It's a record low, and we had seen somewhere like 160 post the listing. This was in August of 2024, and from 160 we are now down to 34. So that's the state of play. Ola Electric is the only two-wheeler stock in the entire auto space that is actually at a record low, when many other auto stocks such as Eicher, Hero Motors, Bajaj Auto, TVS Motors, even all ancillaries dealing with the auto space, including four-wheelers, all of them have hit record highs. In fact, auto has been a source of strength over the last 3 months in the market, but Ola being Ola is where it is.
Yes, recovering a little bit from the opening loss, but as Shell said, record lows coming in. And all right, let's take a look at the overall index now, just in the green, just marginally. And Ola Electric is just recovered slightly, but still down 1% and trading at record lows. What about banks, Shell? We've not talked too much about banks this morning, but we are seeing the Fed say that no further rate cuts, maximum one in 2026. So given that we're at this juncture, how much more scope is there? We've had the RBI commentary come in, we've had the Fed commentary come in. It looks like status quo now for the next few quarters.
Well, Abha, I would just de-link our markets with what the US Federal Reserve is trying to say, because both the Nifty and the broader US markets are not in sync with each other for the moment, at least. That's because of the lack of a US trade deal and, of course, the record low on the repo, which again are linked. But nevertheless, banks, in particular, public sector banks, are the cornerstone of the Bank Nifty at this point of time, and offer, on charts at least, an opportunity to get back into a very strong up move that is continuing for various tailwinds that are there in the macro space. A reduced interest rate cut helps bond portfolios in PSU banks, which are in the lakhs and lakhs of crores. So that is something that needs to be looked at on the medium term. But stocks like Canara Bank, Bank of Baroda, SBI, Indian Bank, and of course PNB are opportunities which the market is giving on the long side. Abha.
Okay, all right. Rajesh, closing comments from you as we wind up the show in terms of what you feel we could close at today, given that we are going to see expiry.
So I think banking is the pocket where one can focus on. I think as Shelji mentioned, yes, PSU banking basket is looking promising. So here we could see some traction, especially in Bank of India, Union Bank, and from private banking. I think one can focus on Federal Bank as well as Kotak Bank. So these banking stocks are looking attractive on the technical front. So some more recovery we could witness. And some of the NBFCs like Chola and Bajaj Finserv, all these stocks are also holding the strength. So one can focus on very select banking and financial space at this juncture. And some recovery is going to continue in metal space. So as we discuss about Hindustan Zinc, Vedanta, these stocks can be focused. And from capital goods, Cummins India as well as Siemens, these two stocks are also showing sign of strength. So I think these are very limited pockets where we feel that opportunity is there for intraday perspective. As Nifty is still struggling to cross 25,800. So I think one needs to be very stock specific in these kind of market, and where the strength is there, I think one can focus on only those stocks where strength is continuously showing sign of buying interest.
All right, Rajesh, thanks for that sound commentary coming in. Keep an eye on some of those stocks selectively as the markets continue to look a little bit nervous at these levels. Clearly, no major fillip coming in on the back of the rate cut, which Trump is calling too small. And Indigo, meanwhile, continuing to, of course, be under the scanner. We'll leave it there for now, but we'll be back at 3 p.m. with all the action on market closing.